You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the option block.
All right, everybody, that rockin' bit of tunage means it is time once again to rock out with everyone's favorite. I hope it's your favorite. It's certainly my favorite bi-weekly source for all things options related. A little bit of wit, a little bit of wisdom, a little bit of education, some unusual activity, a whole bunch of other fun stuff. And guess what? You got yourself the option block. My name is Mark Longo from the old OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If we sound a little bit different, it's because I'm not coming at you from our studio in Chicago. No, for the rest of this week or so, I'll still be down here, galaxy far, far away adjacent. A little bit of the end of the summer blowout here, which is always kind of fun. But don't worry, all of our shows will still be hitting you on their regularly scheduled time. I do believe with the exception of the Crypto Rundown today. But other than that, and all of the other ones will be hitting you at the regularly scheduled times. And joining me to help me put together that regularly scheduled fun bit of programming, let's start off. Let's go out to the land of Maine, where once again we are joined by the rockingest of lobsters himself, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Lion Capital. Mr. G, welcome back, sir. How go things in the land of Maine? How goes the ever-present battle against the clam pirates? Let's just call them. Let's upgrade them to pirates.
The clam pirates? The clam pirates are resting today. They already did their pirating last week, so they're going to wait a few weeks before they come back. In our chat room, there wasn't a note since 11:15 this morning. So I don't think the market has moved in 2 hours from there. Maybe it's rallied like a tiny bit from then, but there's just we can talk about it in a minute, but man, there is not a lot going on in this neck of the woods.
So you're saying today is indeed perhaps the sexiest day in the history of markets? Is that what you're saying?
It's so sad. I think we're just waiting for the next tweet. That's a lot what else are you doing? I mean, I'm look at the chart of the last 3 weeks in the SPX, and you tell me one of those moves over 1% that is not tweet generated. So anyway, I think we're all spectators in the greatest reality show of all time, or at least the most amazing reality show of all time.
We are indeed all spectators in the great stage of life, sir. Way to be very, 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 very diplomatic, and shall we say, get a little deep here on the old option block. Let's kick things off. Let's also roll out. Let's see if he's feeling deep as well. Maybe he has his own battles going on with clam piracy as we speak. Let's go out to the Fidelity hot seat, where we are joined by the last dad of Krypton himself, Mr. TREY JARRELL. TREY, welcome back to the Fidelity hot seat, sir.
Yeah, thanks for having me. Luckily, no clam battles here in Florida. That was a thrilling moment of the show last week, though. I really enjoyed that. I was on the edge of my seat the whole time. But yeah, interesting day here today. Glad to be back. It's always, kind of as Andrew pointed out, what's happening. I think have checked my Wi-Fi signal like 5 times just to make sure that I was connected here. But everything's up and running and good to go.
Speaking of good to go, I do believe he is good to go now. We are also joined by the uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, how go things under the weather shield in St. Charles, sir?
Hey, I am the uncleest of all uncles. That is what I like to think of myself as.
All right, sir. And with the team assembled, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. This is indeed the portion of the show where we break down what the heck is going on out there in the markets. As the Rock Lobster alluded to, it's a smashing day on the old street today with most of the major indices actually starting off and pretty much staying up, as we said, kind of feeling the lift, feeling the gain, feeling the heat to the upside today. Most of the major indices getting back some of what they lost at the end of last week. All of them pretty much up about 1%, with NASDAQ leading the charge up over 1%, about closing in on 1.25% out there. And, of course, kind of a weird day out there. A lot of people are pontificating and debating over what exactly is causing this. Another one of those weird days where the markets are firmly up, and yet VIX cash itself also up. It was up more coming into the morning. As we first start prepping for the show in the morning there, VIX was flirting with a 21 handle, about 20.75. That put it up almost 4 handles from our last show. Now coming into the start of the show here, seeing a little bit of cooler heads prevailing. VIX still up, but slightly, at trading right about a 20 handle right now, so up about 3 points from where it was this time last week. Our old friend VVIX, as you might expect, given everything that's gone on over the past week, also up about 10.5 handles from this time last show. And VXX also up about 3 points to 28.5, so back up again, threatening that 30 handle. So all sorts of weirdness. As we're talking weirdness in the vol space, we'll start in the land of the lobster. Mr. Lobster, I'm sure a lot of your crazies in the pit chat are asking you about this. People are tweeting about this all day long. I saw our buddy Dave Lincoln of the Short Vol Show was tweeting about this. Steve Sears and Barron's. Everyone's talking about it. Scott Nation's, dogs and cats. Everyone talking about another one of these days when the market's up pretty firm, and yet VIX cash also up pretty firm. There's a lot of moving parts, as we talked about before, to what could potentially be causing this. What is your conspiracy theory, sir?
Well, I think my conspiracy theory is put yourself back in the pit when you're younger, handsomer, and skinnier than you are now, much like myself.
Speak for yourself, sir. I age in reverse.
Okay. So let's go back 15 years or so, back to when. So all of a sudden, the market falls out of the sky on a Friday. Everything falls. Vol explodes, okay? And then the weekend happens, and then the gyrations on the weekend are like up, down, 1% up, 1% down, crazy weekend volatility, okay? So when you actually see what we'll call close-to-close vol you're walking on Monday, and we're up 0.5%, like, okay, nothing happened over the weekend. And the market has, at least the vol market, people have a memory. Like, okay, any tweet can move us 1%. And right now, even with our rally up, right, you think of it as, I call this like dragging the at-the-money vol higher. So the liquidity provider is not giving up, basically, that higher realized vol in the short term. They're not going to let the curve rally and discount the vol. So they're going to charge more money for all the options on the upside. They're just not giving it away and letting it collapse into what we'll call a normal rally. This is I guess you'd call it like a bear market rally or a short-term bear rally or something like that. So anyway, all this is a reaction to very, I'll just call it extreme volatility in SPX. I think it's totally normal because the market won't believe the rally until people actually come in and start to sell options. So I don't think we're getting the supply of options into the market where people are like, who wants to sell the 29.50 call if Donald solves, backs off on the trade thing? And then what are we up? We're up 50, we're up 75, we're up 100 points or something like that again. So they're not coming in just to sell the crap out of those options. And likewise, they're not crushing the downside either. So again, I think it's a supply and demand thing. It is a rally on higher vol. And as far as I can tell, it's not going to go away until we kind of have that quiet period of, everything's going great with the trade deal. So, it's not like we haven't heard that before, but I think that's kind of where we are right now.
Speaking of where we are, I do believe we have the audio, the music working for the live folks at least, so they can hear the live. I don't think it was working before, but now it is. So you should be able to hear that going forward, which is a fun little touch. Like to give you live folks, even when we're in the mobile studio here, give you guys a little bit of the touch of home of the Chicago studio. And when I want to touch a home, I think St. Charles is a very homey place. Maybe a little bit of Skippy's, gyros, and lemonade. Uncle Mike, sir, what's going on as you're sipping your fine, delicious Skippy's, gyro or and lemonade today, sir?
Nothing like a Skippy's, gyros, and lemonade to open up a Monday for the week. So in looking at this, this to me, it appears as to what we're seeing right now, it isn't much of a move by comparison. So in other words, on Saturday, the SPX dropped roughly 70-some points. Today, it's up 25 points. So it's not a huge move by comparison. The one thing that I am noticing that I think needs to be at least looked at in this is just the upside move in silver and the relative flatness of gold. So one thing that I had mentioned last week is that silver was not moving a lot with this market downturn or with this market paranoia. It has been moving a lot by comparison to what has been moving, but in comparison to how silver can really move, as it did 7 or 8 years ago, there's really not a lot of movement on it. But today that we are getting some, whereas we have roughly a 1% move in this precious metal silver. So we have that. We have roughly about a 1% move to the upside, give or take a little bit, in the S&P. So we're really you could make a point that after Friday's sell-off, this is just some profit taking for the shorts thus far. However, the other side of the coin is that we are still just 3 to 4% off of our all-time high, and we're getting a little bit of volatility in the marketplace. I think Andrew hit the nail on the head in that if you look at the market over the course of the last few weeks, we have not had a 1% move without some type of a tweet. And so with that, we are it's a waiting for a tweet kind of market, so to speak. And I think that's what we're kind of continuing to do, whether it's a tweet for good or a tweet for bad. We'll see where it goes with it. But for right now, looks like we're waiting for a tweet today to see what we can do.
And let's see what the folks in Fidelity are up to, what they're trading, what they're lighting up over there in Fidelity land. Mr. Trey, sir, what are the Fidelity masses? What are they lighting up today, sir?
Yeah, Fidelity masses are keeping busy as always. So number one today on the topic of volatility was TVIX. Here, the last emperor, as I should refer to him, touched on that a little bit last week, but actually holding the top spot here today. Again, after that, Apple coming into play. A lot of kind of our familiar names here this week. Apple. Certainly been interesting here. Busy week last week, down 4.6% on Friday. A lot of news coming out on Apple here recently as well. Certainly the impact of China on the company going to be in everyone's eyes going forward. But also they had released that their streaming service, right, is planning to come out in November. They've got their new lineup, potentially new phones in September. So a lot of news on the horizon here with Apple. I think that might be what the Fidelity customers are looking to. From a technical spot on the chart, kind of in an interesting range. It's had a lot of trouble last few months getting out above this 215 level. It started to break it right after earnings here, hit 220 briefly, but reversed strong in there in the last few days. Beginning of last week, coming up to that 215 level, pulling back. Friday, did notice it closed right at that 50-day simple moving average. So it was an important level that it did manage to recover from. So, in that short and intermediate term, be keeping an eye on that 50-day moving average, seeing what happens there. And then to the upside, looking at that, 50 point for the 215 point again for resistance. So number three today, another name that we're all familiar with here as well, Amazon. Fidelity customers, certainly showing some interest here. This is actually on the buy side from Fidelity customers here today. Got about 54% buys to 46% sells. Amazon up about 12 points here right now, which is about 0.7%. I thought this was interesting to bring up from a technical standpoint. The 200-day moving average coming into play. Amazon pulled back strong after earnings, but has managed to bounce at this 200-day last few times and sitting right at this point here once again. Hit it on the 5th, 6th of August. Again on August 14th. Friday looked like it was going to break below it, but did manage to save that 200-day moving average here at this point, right at the actual level 1758. Amazon's at 1762. So that's kind of a level I'm going to pay attention to on that. Wanted to make mention of those moving averages coming into play today. Had two other ones that I wanted to bring up that aren't always in there. One that has been on Fidelity's customers' radar here recently, and up here just about 4% today is Roku. We've talked about this a lot. Interesting name. So we spend so much time talking about these streaming services here. Apple, Amazon has theirs. Disney obviously been a lot in the news. So Roku, just kind of an interesting player in the market with, one of these companies that's actually providing some of those services, providing some of the hardware here as well. But up 125% here on over the past year. So big move. Fidelity customers here today are basically split on it, right at 50-50 buy versus sell, but did manage to hit a new all-time high today on Roku. So certainly an interesting name, here continuing, this strong upward trend that we have seen here recently. So last one I don't think that we've brought up before. I can't recall it popping up on the Fidelity customer list anytime here of recent note is Shopify, ticker SHOP. So another one that's really seen a strong uptrend, up about 180% over the past year. Hit all-time highs on Friday. Pulled back strong with the rest of the market, but up here today. It's up about 9 points right now, which is about 2.4%. Here as well. Just very clearly, kind of clear example of what an uptrend is. Here as we've watched it along the way, pulled back slightly after earnings, but since then, big bounce here as well. Not a lot going on in the option market for Shopify. Average daily volume usually about 26,000, so maybe a little bit of a different story than our Apple, Amazons of the world, but pulling about 20,000 volume here today. Leading slightly on the call side, about 11,000 calls to 9,600 puts, and slightly edge goes to the buyers here, about 2,600. Calls purchased here. So, interesting name. The Fidelity customers on Shopify. We're taking this opportunity here to actually sell here today. However, even with that big up day, about 60% sells to 40% buys. But interesting company. Nice to see something new pop up on the list to talk about. But that's what we had today from the Fidelity customers and what's been on their eyes.
Thank you for that. The last dad of Krypton, sir. Let's move on to see what the rest of the market, what they've been up to, what you folks out there who aren't in the Fidelity legions, what you guys are trading. And as you might imagine, pretty much a fairly quiet day. Some elements of the market doing a little more paper than others. Coming into today, quiet, even though we're seeing a surprising bit of an up move in VIX cash at least, and all sorts of funk abounding in the futures and indeed in those out-of-the-money SPX options that drive so much of the VIX calculation these days. Still seeing not a ton of paper on the tape, about 160,000 contracts coming into showtime. The ADV coming off a little bit down to a still hefty 717,000, which if you had told me, seeing ADV in the dog days of summer at 700 plus thousand in the VIX land, that's pretty robust. When you adjust it for seasonality, as our friend Mr. Rhodes likes to do, that's probably closer to 1 million. So that's some pretty strong ADV. SPY also trading pretty hard today too. Almost 2 million contracts on the tape coming into showtime. The ADV a little bit north of 3, about almost 3.5, or 3.4 million. So SPY actually doing some decent paper out there. SPX, same story, about roughly half of their ADV on the tape, closing in on 700,000 contracts, ADV about 1.4 million. So both SPY and SPX doing decent paper today. The Qs actually kind of lag behind a little bit, about 318,000 contracts on the tape. The ADV about 770,000. The Russell also lightening it up today, about 360,000 on the tape coming into showtime. ADV about 460, so only 100K off their ADV. Russell, as we've been saying on TWIFO for a while now, kind of been marching to the beat of its own drummer. Maybe it's time to bring back the old RVX, a.k.a. the Russell VIX. I know I'm a fan of that, so maybe if you guys are too, hit up the folks over there at the SIBO. Tell them to get their butts in gear and bring that product back. Meanwhile, let's move in to see what you guys are trading. The top 10 today, most actives, as you might expect, kind of light. Number 10, what Trey was just talking about there, ROKU, also lighting it up with you folks out there. Number 10, though, is only 70,000 contracts. And this is as of a few minutes ago. These are updated numbers, so pretty light day out there, listeners. 70,000 gets you into the top 10 today. Number 9, we got Boeing with about 77,000 on the tape, 46,000 coming on the calls, so 60%. Number 8, Facebook, 81,000. Number 7, good old Amazon, 87,000. Number 6, GE, 91,000. Number 5, Tesla, breaking into the top 5 today, 100,000 even on the tape. Bank of America, number 4, 109,000. Number 3, good old Softy, making its way into the top 3, 125,000. The top 2, now it seems like everything is right with the world again. These are the top 2 names we've come to expect in the most active recently. Number 2, AMD, 232,000. And number 1, our old friend Apple, 284 on the tape. Let's see what the most biased paper we're seeing today. Actually, it's a tie between Bank of America and AMD. Both of them have 82% of their paper hitting the call side of the ledger today. In terms of earnings for this week, it's not a heck of a lot on the docket unless you're really excited about Billy after the close today. I wouldn't hold it against you. Not exactly a big trader of that name, but hey, maybe you are. And then looking out the rest of this week, we've got a few names coming out. Smuckers, for those of you who like your jams and jellies before the bell on Tuesday. Wednesday, we've got our old friend Cody. Chico's, one of Mr. Meatball's favorite names. H&R Block after the bell on Thursday, as well as Boxing and Five Below. Those of you out there in the premium dollar store category, Five Below after the bell on Wednesday. Thursday, we got Best Buy, we got Dollar General, so the regular dollar store reporting there. TD, as well as Ulta and Dell after the bell on Thursday. And then Friday, everyone's favorite, Jinko, So an interesting kind of the dregs of the season coming up here, but still some interesting names. And if you guys like all that analysis, it's still there for you. TheOptionsInsider.com, the place to go, of course, to get all your earnings move results reports, and indeed your earnings season reports. These are new. These are new for this season, listeners, so check it out. Meanwhile, it's time for us to keep on rolling, to check out what's lighting up the dark side of the street today. It's time for us to roll on into the Odd Block.
The Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the program where we break down what the heck is weird, what the heck is wild, what is whimsical, what is lighting up the paper today. God, looks like I got a bunch of, for the most part, some new names lighting up. Also, seems like the order of the day, Mr. Rock Lobster, today is a little bit of longer-term paper. So we shall find out what the heck we've got going on out here. I think your dog is into it too, Mr. Rock Lobster, as we kick things off. Here we go. Maybe if I typed in the right ticker, it would certainly help. There we go. All right. Now all's right with the world. Yeah, this is a newcomer to the Odd Block here, certainly. This is Banco Bradesco SA, obviously an ADR. This is one of Brazil's biggest banking and financial services names. Trading today a whopping $7.61. Mr. Rock Lobster, can you wrap your head around that level of high pricing, sir?
I can. I was a little taken aback. I got thrown off the show a little while ago. Not sure why, but I'm the umbrage was building in the craw, in my craw. That's what they say in Maine. That's stick in your craw.
Is that why you gave me that flash of quality video? That was so good. Are you trying to throw me off my game again? I'm still reeling from that, you know.
I try, you know what, the listeners don't realize all the stuff we torture you with in the chat.
All the behind-the-scenes machinations that go on here to make this show happen, listeners. The pain I have to go through. I should be in a galaxy far, far away right now. Instead, I'm talking to you guys. That's the love right there. It seems like we got some long...
Bradesco. They're selling the puts because you know why? Because now all of a sudden everybody cares about Brazil. You know, Macron? I can never pronounce his name right. It always sounds like macaroon to me. But something's wrong with the Amazon. It's burning. It's bad. And I think people are looking like they're going to take, their dollar, which is a pretty good return out to 2021, as far as I can tell. $1 on a $7 stock is not bad. And on they go. So
before you get too far ahead of me, let me tell the listeners what the heck we're talking about here.
See, there I go again.
I know you've only done the show once or twice, but let me regale you with how it works. First, we explain what we're talking about, and then we analyze it. But you can go the backwards approach too. That might work. Mix it up. We shall see. Listeners, yes, we are talking about good old Banco Bradesco SA, ticker symbol BBD. That's obviously an ADR. And trading today, $7.60, off about 12 cents, or about $1.50, 1.5% or so. This is the name over the past year. It's had an interesting range. It was trading shy of $6 a year ago, $5.91. Then it rallied all the way up to $11. It looks like that happened back in February. Then they threatened it again back in July. So not too long ago, they were threatening that 11 handle. And then it seems like recently things have not gone their way, not surprisingly. Most of the headlines out of that region of the world haven't exactly been overwhelmingly positive of late. So we're seeing a lot of weight on this name in the last few months. And so it's trading from 10 down to $7.60 right now, down $2.50 or about 25% just in the past month or so. This name, of course, let's look out and see what we saw. As Mr. Rock Lobster already revealed, we did see some puts. Interestingly enough, longer-term puts. We saw 15,000 of the Jan 2021 7 puts going up for nearly $1, 97 cents. Of these things, as you might expect, were a little bit wide. Not a lot of paper going out in 2021 puts in BBD. But we've got, they were 93 cents at $1.18. They went up for 97. So he got himself a little bit of the old price improvement to go 15,000 of them. Obviously, there's going to be a few earnings between now and 2021. The next one coming up on October 31st. first. Mr. Meatball, you were just starting to parse this. Looks like our old friend harvesting a bit of the old risk premium. You like this one? See, I mean, the 52-week low is $5.50, about 541. So he's not quite getting himself down to the 52-week low, but he's got himself a decent buy-in level. The only thing is, I know you're not a fan of locking in long-term shorts like this. Let's start there. What do you think about locking in this paper until Jan 2021? He is getting a buck, but he's tied up for a while here.
He's tied up, and to me, I mean, this is decent. It's what? It's 7, maybe 10% for a year and a half. It doesn't look like a bad yield to be long this. The stock only pays like a small dividend, so I think if you are one that wants to dabble in, the emerging markets, I read somewhere that they haven't really gone anywhere in about 8 or 9 years since the financial crisis. So it would make sense that somebody's taken the I only want to be kind of long approach. They're not getting the go long approach. It's just, it does tie up the capital, but if you do have a run to, let's say, $9 or $10. I mean, those puts should get crushed. So, I mean, you could get a fairly quick return out of it. It's not my favorite. I don't like the less than 1% per month return selling a put. Because, if you're going to sell a put, you're trying to do better than the market, not worse. If you go on the 7% return on average for equities. So, I try to find a better looking put than that, but it could work. I would rather buy puts in stock on a ratio on a trade like this, to be honest, and try to, get as much long ratio as I can out of it. But apparently this person does not appear like they're doing it. They just want their 97 cents and they're going to be happy.
They want to put it away, set it and forget it, get their buck, and come back a year from now, and they keep their buck and they do it again probably, or a year and a half actually from now or so. So yeah, longer term one. I kind of like this time frame. It seems like the market does too today, Mr. Rock Lobster, because it's all long term stuff lighting up today. But if you're saying to yourself, that was interesting, but what do you got more? Forget these foreign names. What do you got in the America? What do you got in American names? That's a little bit longer term. Well, we got you covered. Doesn't get much more American than this next name. How about Axle? This is American Axle and Manufacturing Holdings, ticker symbol Axle, AXL. This is a manufacturer of automobile driveline and drivetrain components headquartered in Detroit, baby. That's American. That's pretty American, Mr. Rock Lobster. Wouldn't you agree?
As apple pie. American
Yes.
Axle, and yes.
America. So let's see what's going on in America today. Before we do that, let's look back at the year that was out here in America, aka Axle. They were trading substantially north of this a year ago. This is kind of a theme. I've been talking about this with your cohort there, the Meatball of late, Mr. Rock Lobster. These automobile suppliers and manufacturers are way more volatile than you think. They're like mini biotechs, and this name certainly fit in the bill. A year ago, they were trading almost $19, $18.60. And their 52-week high is actually $19.34, which they hit, looks like, back in September of last year. Then they sold off pretty aggressively. By November, they were trading 11.5, so they came in about $8. And of course, they hit their nadir originally of 10.62 back on, of course, Christmas Eve. Then they rallied up to about 16.60 again. Looks like things were going good. Then they started selling off again. By June, they were down to 10.30 again, and then they recently got up to 12.30. And then they just cratered in the last month or so. They went from 12.30 down to where they are right now. Pretty much a 50% sell-off down to almost 6.30. So dark times here of late for Axle. Let's see what our options friends were up to out here today in Axle. More long-term puts, Mr. Rock Lobster. But this time, looks like they're flipping the script a little bit. Our other friend was harvesting a little bit of premium out to Jan of 2021. This new friend here looks like he's getting himself some put love. Jan 2021, 3 puts. So yes, the 3 strike. Going up 8,250 times. Pretty much, not on the offer, but pretty close. These are actually decently tight for a far out of the money illiquid name. They were 20 at 35. Usually you might see no bid at like half a buck or something weird like this. But 20 cents at 35. They went up for 30 cents, 8,250 times. This was indeed opening. Obviously, there are earnings. The next earnings coming up on the 1st of November. Mr. Rock Lobster, flipping the script here. He's hedging, but I don't know. When you're buying puts at $3, is that really a hedge at that point? That's just like a catastrophe break even, maybe.
I don't quite. It feels like this might be a roll. There's a lot of puts that went up as well. Some of the 8 puts went up. That looks like, and this is all 2021. I mean, it's a long ways away. I think possibly we could have a little bit of rolling action on this. I'm looking at some open interest. To be honest, I think they're just taking their money and going. I mean, the stock it's at a 5-year low. Maybe this Axle is suffering, Visa, the whole China thing and exports and all the rest of it. And they're certainly have not done since we declared the great trade spice war of 2018, 2019, where the Federation is having a hard time. So I think that somebody's just rolling down. They're trying the next level and seeing if we can get a little pop back up. But it smells like rolling paper to me. Not the kind of rolling paper, of course, you might fill up with some sort of herb that's now legal in most states in the United States. It's rolling paper as in rolling puts from one strike to another.
Yes, I think you're right. I see that print that went up now of these 8 puts for 256, 4,500 times, pretty much right off the bid. So that makes me a little happier here, Mr. Rock Lobster. This person isn't just gobbling up. They obviously got some profits. They're taking those off the table, at least on the put side, putting some of them back to work. Obviously, they're not just taking all the money and running, but obviously they're not spending all of it either. So that makes me feel a little bit better that it's not just straight up catastrophe. Obviously, he still may have some downside concerns, hence the 8,200 lot going up on the 3 strike, but still, bit of a roll going up. That's why it's always fun to parse these, listeners, and see what the heck is going on. Now, let's see what's going on in our final name here. If auto suppliers and Brazilian banking names aren't volatile enough, then we got a biotech for you here. This is FibroGen, rounding out our big 3 here today. Ticker symbol FGEN. Trading today, $45.02, up 330 or nearly 8%. So yet another volatile day for a biotech. A year ago, it was trading 61, so substantially north of where it is right now. Then it sold off down to about 37 and change back in Christmas Eve, of course. And then it rallied back up to about nearly 60 again in February, then sold off again down to its 52-week low of about 33.5 back in May again. So as you expect with the biotech, all over the freaking place, and that's where it was. And it's rallied back up again to where it is right now. Got up to 48, and it's kind of selling off a little bit down now from about that recent high down to 45, but it just rallied $3 today, so it was at even lower just very recently. So all sorts of where was it trading 41.72 not too long ago. So this name, as you would expect for a biotech, kind of all over the place. Let's see what the options activity was today. It was also in Jan, but not quite as far out as our other friends. This is the Jan 45 calls. So at the money calls, going up 3,700 times for 560. This is a dime off the offer. So it looks like someone was scrambling to grab these. Of course, they went up late on the Philly, so maybe take that print with a bit of a grain of salt there. Obviously, there's going to be earnings between now and Jan. The next cycle for these guys comes on November 7. Mr. Rock Lobster, this thing is kind of swinging all over the place, as you might expect for a biotech. Someone coming out here deciding to pay through the nose here for these Jan 45s, and at least given today's run, let's see, when did these go up? These went up at 11:04, so a little later. So I'm not sure if they caught the run-up or if it already happened, but either way, paying through the nose here for these Jan 45s. What do you think about these, Mr. Rock Lobster?
This is one, it almost seems like they created every possible trade condition known to man putting these options up. Like, yeah, we're going to put them up. Oh, no, we're not going to put them up here. We're going to put them up there. We're going to change the volume. We're going to change the price. Or all kinds of just weird stuff. It feels like, strange one, relatively in the money call, pretty juicy. I mean, either way, if they're back spreading them or just buying them, they're looking for a big move for absolutely sure. So somebody is looking for a big time move. Maybe this is a riff on, I thought there was another drug deal today. AMZN bought somebody. Maybe somebody's trying to get in front of it a little bit, but, one way or another, they're paying, what is that, $5.60 for the options. So that's, I don't know, synthetic, almost a $12 straddle. So even though it's out to January, it's not small dollars by any stretch of the imagination. So
no, they're
somebody
paying.
wants themselves some calls.
Yeah, they're paying. They're paying some juice. Maybe we'll put this one in the to be watched category, Mr. Rock Lobster, and we'll come back, see how our friend buying some vol. I guess it's kind of hard to argue with the vol buy on this name. I'm not sure if I like this level, but selling premium may be a difficult road as well. This thing moves all over the place, as you'd expect with a biotech. So we're going to put this one in the to be watched category, listeners. Meanwhile, it's time to watch Uncle Mike, or perhaps listen to him, because it's time for the strategy block.
The strategy block.
All right, everybody, welcome to the strategy block. This is indeed the portion of the program where Uncle Mike holds court. And, it seems like this is the type of market where, things are selling off, then they're rallying hard. Day like today, maybe you got some upside calls you wrote at the nadir of the market there, and you're saying to yourself, when should I take these bad boys off? When should I roll these covered calls? Uncle Mike, I'm sure a lot of people have these questions today. When they call up St. Charles Wealth and they ask you this question, what do you tell them, sir?
Well, a couple of things. I think you need to have a plan for if the market goes up, market goes down, or market goes sideways. So in other words, let's examine all three of these for the time being. If you own a stock and you're short a covered call on it, one thing I like to tell people is that should the market go against you, meaning we have a down market, then I like to get out of covered calls for profit on the covered call. Of course, will ultimately be a non-profitable position because the loss in the stock will be greater than the gain in the call. But I like to get out when I can achieve 80% of the initial credit. So in other words, if I sold a call for $1, I have a limit order in there to get out of it at 20 cents, good till canceled. So I think that's something that's very important to understand to begin with. The analogy I love to use is that taking out those last few pennies of premium is very difficult. And so as an analogy, I like to tell people that let's take a towel, soak the towel, and then squeeze the towel out over the sink. As you squeeze the towel with your hands, you're going to get most of the water out of it. And that's why I like to relate to 80% of the premium that you take in. The other 20% is that water that's still in the towel that no matter how hard you squeeze, you're not going to get that towel completely dry. And so it's very difficult to get that last 20%. Now, it's possible, of course, if the market goes way down or way up, if you're short a put, whatever the case may be. But trying to squeeze that is a losing battle, I think. You're better off trying to do something else. So at the 80% mark, I think it's time to move on. Now, you could say 10%, you could say 90%, you could say 85, whatever the case may be. 80 is just kind of my comfort level and has been for many years. So now the question then becomes, what if the market goes sideways? Well, I think the same concept needs to be there. I like to get out when we've had enough time decay in place to get the 80% of the market. And I don't think it makes sense to take an option into expiration. Unless you know for sure that you want to get put the stock or a situation like that, but typically you're better off getting out and then getting into the next month's covered call if that's what you're looking to do. But with that, those are two fairly easy concepts, I think. Where it gets a little bit tricky is when do I get out of a call should the market go higher on my covered call? Well, I think initially the thing you need to have an understanding of is what's your plan to begin with. What we like to do in our triple income strategy is we'll either just say, okay, let's just get called away. We get called away, that's fine. It takes a lot of the worry, the anxiety away from it. And we know that if we do get called away, that we've achieved our maximum profit for the week, month, year, whatever our time frame is for the short call. That's the easiest way of doing it. Now, the next thing that people do is what I oftentimes think of as kind of a losing battle. And that's trying to roll up and out the covered call. You despise being called away, yet you still write covered calls. Not wise, in my opinion. Meaning, if you're thinking, okay, I'm going to own a stock. I want to own the stock forever, but you know what? I want to just get some income on this stock. 'Cause it's not doing anything, just sitting there, that silly old stock. Why don't I get some income on it? So you write a call on it. Stock goes up. Well, I don't want to get called away on the stock. So you get frustrated with it. This covered call stuff's for losers. I hate it. Or you try and play a losing battle. The losing battle with which you're playing is if you try to roll up a covered call. Now, it can work at times, and people do it, but I'm not a fan. And the reason I'm not a fan is because of the fact that when you try to do something like that, what's going to happen is that you're going to be buying an option and then selling another option with typically a lower implied volatility, because as the market goes higher, implied volatility a lot of times goes lower. And when you run into a situation like that, you're creating a less favorable position. On top of that, you're probably going to take a loss on the covered call that you bought to cover. So I'm not a huge fan of doing that, because in the end, it typically doesn't end well. Now, let's say you're in that situation, like, oh, I'm really stubborn, I want to own my stock, but I want income on it too, by gosh. I don't want to get called away. Well, like I've been really preaching the last couple of years on this show, is that I would recommend taking a look at selling a call spread. In that, if the stock is at $50 a share, you can sell the 52 half, 55 call spread. That way you'll get some income on it if the stock stays the same or goes down. The 80% rule would still apply just on the spread instead of the single leg call. But then if all of a sudden the stock just rips up to 52 half, then you're looking at this with that horrible, uncomfortable feeling that you have in the covered call, thinking, oh, should I roll up? What do I do? Oh, man, I hate selling covered calls. Instead of having that feeling, you can just sit there saying, okay, I know that if this stock rips up to 60 or 70 a share, I'm going to be a part of it, with the exception of the distance between 52 half and 55. Call spread solves a lot of those problems. So in conclusion, I would just simply like to say that if you want to own a stock, you want to get some income on it, and you don't want to get called out, but you're willing to take on a lesser income, and you're willing to give up a little bit of stock profit on it, not a ton, look to do the call spread. And there you have it. Should the stock roll down, you have a plan. Should the stock stay the same, you have a plan. And should the stock go higher, you have a plan either way. And that is the strategy block. Last one for August, folks. Fall is coming.
Crazy to even consider that. But I think we could consider a little bit of your mail, too, with a little bit of the old mail block. All right, everybody, welcome to the mail block. This is the portion of the show where you guys ask your questions. Let's see. Got a bunch of them here. People asking about specific tickers. Got some long. Let's try this one here. Let's go Robert. Robert Stoute wants to know. He says, hey, Mark, just a little bit about the options, trades, and strategies that I use. I trade the short put verticals and have been doing well, but I'm getting hammered on the max losses. I am looking to get into other strategies that have a better win-loss ratio. A friend mentioned your show and your contacts would be helpful to me. Well, let's see, Robert. Well, we've talked about that before here. That's obviously a very enticing entry point for a lot of listeners on the show here. They come, they get lured to the dark side, quote unquote, by harvesting that short premium. I like the fact that you're doing verticals. Usually when we get this email, it's, hey, I'm selling puts naked and I'm getting wiped out. So I like that you've taken that first step of going to the verticals. That's always where I start people. Hey, go to the vertical, because that at least is capping your risk. It's mitigating your risk. You know exactly the max loss you can have in this scenario, and you know exactly what you're getting I know it's a hard step for a lot of you to take to actually buy that second leg, but if you do it, if you're in the situation of Robert or a lot of other people out there who've encountered this, that I think you're very happy right now to have had that vertical leg on as opposed to being naked. But still, there's a lot we could do. We don't have a lot of time to get into it, so let's just go around the horn really quickly and let's get a cavalcade of opinions on this. Let's start in the hot seat. I got to imagine, Trey, you guys must get hit up on this. I'm going to conservatively say 8,000 times a day, something along these lines. So what do you have to say for our buddy Robert here?
At a minimum, at least. One of the great things, about options, right, is just the flexibility that it provides us. I'd say when you're thinking about it, Robert, remember you have calls, puts, and you can put them together in any combination. Why do we put them together in these different combinations? Well, it should be to match a specific outlook. So, like Mark said, you're thinking about it, I think, well from the risk management side, but, try and add a directional perspective to it as well, right? When you're, bringing in that premium, you've got time on your side. What you don't have on your side in this recent market has been direction, right? So, add some additional analysis to it, right? We talk a lot about technicals here from the strategy desk. Anything you can do to give yourself that edge, for example, right? If you've changed from the bull market to the bear market, well, hey, you can still do creds. You're just doing credit spreads. You're just doing short call spreads instead of short put spreads. So, be flexible, but that directional outlook and would be the main thing I'd say to incorporate into your analysis and let that dictate, the right strategy in a given situation.
Mr. Rock Lobster, I got a feeling you've fielded this question once or twice. Maybe our friend here wants to learn more about the world of options. Do you have a recommendation for him where he should go?
Well, of course, you go to Option Pit and learn all kinds of stuff about all kinds of stuff about options. I'm interested. He's like, I trade the short put verticals and have been doing well, but I'm getting hammered on the max losses. So I'm a little confused by that statement.
Yeah, it's kind of hard to do well and then get the max loss at the same time. Unless he expects that, and then that's his outlook. He wanted the max.
And then I think Trey said, you can combine options in any way you want, and I have to say, yeah, you can. So what I do when the market's more volatile is if I sell put spreads, I'll try to think of it as a more serial way to sell put spreads. Like, okay, I'm going to sell some this week, or I'll sell some in 2 weeks and then sell some 2 weeks after that. But against those put spreads, I might buy a few puts. That way, if the market kind of blows apart, you're not totally left holding the bag, depending on the pricing. Sometimes the pricing can be just downright great, where the market's not really adjusting the long-term vol high enough yet, and the short-term stuff is relatively expensive. So that if you want to be more aggressive, selling stuff closer to the money, at least you have something. I think that is a pretty decent way. And another thing, too, is it's the same thing with, I don't sell stuff unless I can afford to take delivery of it if I'm in a credit situation. So you sell a put spread, it's a credit. Can you really, can you deal with the credit on the spread? Because I don't ever want to have to be forced to close anything. So I think that might help too, and it narrow your choices down into things that you can you can manage or trade or stand taking delivery on. So it's you have to be mindful of that when you sell spreads, because that credit, while it looks enticing, can come back to as you just learned there, getting hammered on the max losses. You need to. At a high vol, you need to move away from the strike. 20 VIX means we're moving at probably 40 to 45 points a day in the SPX. So if you're selling put spreads that are only 1% out of the money, even though they look juicy, there's a reason, because SPX is going to be there in like 3 seconds. So what I'd say is you've got to exercise some TOSAW and trade like a risk control and restraint on selling those vertical spreads when VIX is in the in the low 20s.
Yeah, I would love to know more about how he's choosing his underlying, what methodology he's using for choosing his strikes, because maybe we could start there with maybe if he's just doing, you're right, if he's just doing the old scanning for the most volatile name of the day, some crazy biotech you never heard of, and he's writing put spreads on that. Yeah, just chances are that vol is merited. So that could be also a big part of the issue. Mr. Uncle Mike, when the client calls you up with a question like this, sir, what do you tell them?
I tell them the same thing that I've told us on this show a million times. I want to keep it simple in this situation. When you're selling a put spread in a leveraged format, rule number 1, don't let it go in the money. Rule number 2, don't forget rule number 1. Very simple.
And we're going to keep it simple as we keep on rolling into our final segment. It is time to go around the block.
Around the block.
All right, everybody, welcome to Around the Block. This is the portion of the show where we tell you what the heck's going on for the rest of this week. Not a heck of a ton. You had some durable goods on the calendar today. You got some jobless claims. But, hey, it's the final week of August. Not a heck of a lot on the tape outside of the Tweet Watch. Tweet Watch 2019. It seems like everyone is embroiled in that these days. Let's go back around the horn. Let's go the opposite of the way we came. Uncle Mike, sir, what is on your radar for the rest of this week?
Definitely the Tweet Watch, and then seeing if we can get the 3,000 mark back into the realm of things with the SPX. Like Andrew said, 1%, we can do that in like 3 seconds. Keep that in mind, folks.
And Mr. Rock Lobster, sir, what are you keeping an eye on outside of the ever-present Tweet Watch?
I'm trying to figure out what there is to keep. The earnings are done. We have a month and a half to go for VIX should be 10 by now, and the SPX should be 29.50, and it's not. So it's probably an opportunity if you think this trade war thing can come to some kind of conclusion. But if history is a guide, it usually takes about 2 months of nobody tweeting anything about the trade war for everybody to forget about it. So since right now we're basically at like Spinal Tap Volume 11, or whatever. I think this time something will shake out, either really bad or really good, within a couple of weeks. Because now we're kind of, the election's coming up, and some of this stuff has to get solved in order for certain people to get reelected. So I think time is starting to run out now in 2019.
Yeah, and I think the Chinese may know that as well, don't you think? So as the clock ticks closer to Election Day, all of a sudden the administration's hand grows a little bit weaker with every passing day. So interesting stuff. They still got time, obviously, a year and change before the election, but anything can happen. Mr. Trey, take us home, sir. What is on your radar for the rest of the week?
Yeah, just keeping an eye on the S&P, just like these guys. A couple levels that a bit of interest here recently. This 2940 recent resistance here over the last few weeks. This support area of about 2830. We're just outside of those ranges. You have the 50-day moving average to the top, 200-day moving average. So. Just this sideways action, a wide range of sideways action, but waiting to see which way this ultimately breaks out. Right, if we can continue that upward momentum and push through, or if we fail to the downside, obviously the tweets may end up being the drivers of those. But that's the main thing. Light on earnings here this week. We got GDP on Thursday, so going to be paying attention to that as well. But that's what I've got my eye on.
All right, let's go back around the horn, listeners. Unfortunately, that music means we have run out of time. But before we wrap up, let's start with Uncle Mike, sir. If maybe a listener like Robert or others out there who have questions, maybe they don't want to deal with this stuff anymore. They want someone else to roll their puts for them when they get down to that max loss, or hopefully before then. Where should they go? What should they do, sir?
Call me up. Go to my website at stcharleswealth.com to find my number, and be more than happy to work with you. It's fall. Kids are back in school. So for those of you that have been putting this off, saying, hey, my kids are, I want to wait till my kids go back to school, now's the time. Or if the kids go back to school next week, well, maybe next week's the time. Either way, give me a call. Would love to talk with you.
Your kid's are already back in school. My kid's in the galaxy far, far away. So I guess maybe he wins for this week. All right, let's keep on rolling. Let's go out to the land of Maine. Who knows where the Rock Lobster's kids are? I don't think he does. But let's find out anyway. If I want if I want to help with all this max pain of put rolling and everything else, Mr. Rock Lobster, where should I go? What should I do?
You can go to our website, coming up, optionpit.com events. Mark's doing a webinar on butterflies and strategy. That is coming up, well, just really darn soon. I think September 4th at 8 o'clock. So about ways to trade butterflies, that you can learn stuff. Also, there'll be all kinds of goodies with that. And, of course, going to our store, if you want, to learn about how to trade options, it's the easiest place to go.
All right, and last but not least, Mr. Trey. Sir, if folks want to kick the tires and light the fires in Fidelity land, where should they go? What should they do?
Yeah, very easy. If you're not a Fidelity customer, check out our website. Go to fidelity.com/options. Learn a little bit more on there. We got some great information about our option trading, our platform here as well. If you are a Fidelity customer or thinking about becoming one, you have access to our strategy desk team. Give Fidelity a call. Ask for the strategy desk. Feel free to ask for me as well, or any of other guys that come on the show. We'd be happy to help you out and talk to you about some of the other upcoming classroom and coaching sessions that we do have available for you.
There you go. Fidelity.com/options is the place to go. Kick the tires and light the fires, as they like to say. And on behalf of Mr. Dad, Last Dad of Krypton, and the Rock Lobster, and Uncle Mike, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for checking out all the fun stuff we have cooking. And we'll see you back here again for more shows coming up on Wednesday, I believe. So more stuff coming at you from the mobile studio. Got some advisors option, got some OPR, all that good stuff. Then we'll be back here again on Thursday to break it all down again with a little bit of the old option block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.